It is Thursday, the 22nd. Good morning. On the agenda, Trump dials back the tariff threat. European stocks are set to bounce, and tech optimism helps.
Good morning, Anna. Let's talk about these markets. Trump puts taco back on the menu. AI brings dessert. Stocks are higher. Keep an eye on chip stocks in particular. Eurostoxx 50 futures up by 1%. If you think the risk story is over, take a look at gold. We're down, but not very much. In fact, hardly at all. Goldman Sachs out with the 5400 call on that one. The next bigger event, because we're done with Greenland, is what is happening with dollar yen, what is happening with the Japanese bond market. The BOJ meets today. We're going to hear from them tomorrow. That's the next big event that we're watching. Dollar yen currently trading 158. Sumitomo has a 180 call potentially. The countdown to the opening trade starts right now.
It looks like we have the concept of it. It gets everything we wanted, including especially real national security. Well, the deal is going to be put out pretty soon, and we'll see. It's right now a little bit in progress, but pretty far along. It gets us everything we needed to get.
So the President, of course, speaking in Davos. There is a live shot for you, of course, from the World Economic Forum. Guy pointing out that the taco trade is back on the menu. To what extent do we have to thank the Nato Secretary General, Mark Rutte, for that? Is he now the ultimate Trump whisperer for the Europeans? We know now there is some kind of negotiation going on.
Yep.
The details are the next key question. Axios and New York Times. I think the details are important.
Why
the markets will care about the details, because whether or not this gets kicked into the long grass or we get to new bouts of volatility. We've seen the moves in the VIX on the downside. What's the VIX? On the back of the details. Axios and New York Times reporting that we could be looking at a Cyprus-like deal for Greenland where US bases are given their own sovereignty. That could be part of the mix. But I think question marks and answering questions about the nature of this deal will be significant for the markets.
Don't we care because it tells us something about whether this could reheat?
Does it reheat? It just feels like it's in the rearview mirror now. You've got the Spanish Prime Minister just put a statement out, has close contacts with NATO after he's calling it the Davos deal. Is that what we're going to now call this? The Davos deal. Sovereignty is going to be respected. Looks like that's going to be the trade. Trump is basically walking back what he's
walked back the tariffs, and that is the important factor, isn't it? That's important for markets.
It looks like he's going to be fairly comfortable with some sort of a deal getting done on Greenland. I'm not saying, by no means am I saying that Trump is done as a volatility generator. No. Clearly he is going to continue.
Absolutely. Those tariffs could come back for any number of reasons.
Precisely.
Not Greenland, perhaps, could be Greenland, could be something else. But that's possibly the big takeaway. The geopolitical damage done by this to the relationship between the US and other parts of the world, clearly not something that will go away. But the tariff threat has gone. I suppose that is the thing for the markets.
Was it the markets that constrained, ultimately, and contained Trump's instincts? And if he puts out the papers this morning and it's got taco trade all over the headlines, does that make... We know he's sensitive to that. He doesn't like that acronym.
Yeah.
Sure. So let's talk about the taco trade. Stocks are up. I can't wait. So stocks are up for a number of different reasons this morning. So let's just put that into context. Gold is not down very much, which I think tells you an awful lot as well about people's risk perceptions. Trump is going to be a volatility generator. He is going to continue to do so. That is going to be the risk that we have to work with going forward. And it's only going to be amplified potentially as we head towards the midterms. So all of that is in. But stocks rally on the back of this. You can see this yesterday afternoon. The Davos deal is done. We move on. And taco is back. Those that bet on taco got it right.
Yes, although it's really interesting because is the amount that things move on taco, is it declining? Because if you compare this to April, this was not an April event, was it? The scale of the market moves were not giving those kind of signals. This was much, much smaller, and therefore is the feedback into his decision-making a lot lesser.
But you end up with a kind of chicken and egg scenario. Do you not get a big market move because people assume that taco is going to happen? Was it Rutte that ultimately delivered the kind of the deal here, and do we have him to thank rather than the markets to thank? But the amplitude of the market move was not that great, really, in as you say, compared with what we saw kind of last year.
And it comes back to that central question: how do you trade a mercurial president? Remains a question.
You don't is the trade basically. You don't trade it. You assume that
you increasingly discount the commentary. Is that what you do?
Because you don't know which way it's going to go, but you assume that ultimately he will climb down. There's a lot of bluster, and you just don't trade it.
Let's also flag, I think Tom mentioned this already, but we are going to be speaking to Mark Rutte, the NATO Secretary General, speaking at Davos to our editor-in-chief, in fact, here at Bloomberg, 8:30 UK time. So that conversation certainly will be very helpful in getting us to a place where we can really understand to what extent this issue has been put to bed. Certainly the tariff threat for the moment has gone, and we can focus on other things.
Well, AI is bringing dessert today, right? OK, so that's the chip stocks rallied yesterday. Looks like they're going to continue to rally today. They've rallied overnight in Asia. But actually, I think the chip stock is the secondary story to the OpenAI story this morning. Apparently, OpenAI is in the Middle East. It's raising money. 50 billion is the amount. That puts a valuation of 750 to 830 in terms of the AI valuation, the OpenAI valuation. Are we heading for $1 trillion IPO this year? Certainly, that is where we're going. Remember, this is a company that's still not profitable. It could be heading for $1 trillion valuation. It's committed to spend 1.4 trillion. And Johnson Huang, it's going to need to, because Johnson Huang's talking about the fact that we're billions into this AI build-out, but there are trillions still to come.
We've got tacos, we've got chips, we've got dessert. I don't know if anyone else is getting
There's definitely a food
this is all for
theme.
breakfast.
The one key...
Hell of a breakfast.
There's a lot to unpack. I think the IPO of OpenAI is absolutely crucial in terms of the market test for these large language models and what it signals. If we get an IPO in 2026 for OpenAI and it is well received, or if it becomes a WeWork moment. Is it a WeWork moment or is it an Amazon moment? Where we were fretting around Amazon not being profitable, and look at Amazon now. Or is it a WeWork moment where the prospectus lands and investors freak out? I think that is a key test.
Yeah, I mean, the reach into other parts of the economy is then the next part of the story, isn't it? Because, to your point, I mean, it was interesting that I do think the OpenAI story, perhaps giving us more than the Johnson Huang story. Both are being written up as things that are risk positive for tech stocks. But Johnson Huang just saying things he's probably often said before, but the OpenAI putting new numbers out there, maybe that really helps. And something lifted the Kospi above 5,000. And so that has been a consistent, I mean, not entirely, but it's been a consistent theme, at least, since the start of this year. That
I think you're right. The biggest story is the OpenAI story. I think what's lifted the Kospi is probably the chip stocks. And the fact that Johnson is talking about the fact that we're billions into it, there are trillions still to come, the spending is going to be epic. And that obviously is, I think, just if you're a chip investor and you need kind of some reinforcement this morning, he's out there providing it again. He keeps cheerleading that story.
There's also some cheerleading for plumbers. I don't know if you saw this. Johnson Huang said plumbers could be making electricians, carpenters, plumbers, all getting a shout out from Palantir, from CoreWeave, and from Johnson Huang. So if all goes wrong for me on set, I know what I'm going to retrain.
I've heard this from Goldman Sachs also, when you talk to them about where are the jobs in an AI world, and they talk about all the real world jobs that will still need to happen.
But once you've built these data centres, do you continue to need these people, is my question.
Oh, I'm sure they get too hot or too cold. You need to call someone.
Okay, so we're going to need to continue with them. But the other thing is, who are they speaking to? Are they trying to calm public opinion down because they're worried about all the job loss story? Are they speaking to governments saying there's going to be loads of jobs as a result of this, don't fight us on this? Because that noise is growing, concern that we're going to see jobs. You saw what Sadiq Khan had to say here in London the other day, talking about kind of mass layoffs and London taking it really hard. So who is the target audience for these kinds of comments? Because it sounds like they're all on the same page delivering these comments.
So we have a full menu of tech and a bit of lingering geopolitics, certainly tariffs still to think about. Let's tell you what's coming up from Davos. Lots of big interviews coming from Davos. The European Investment Bank President, Nadia Calvino. Now, they've been leaning into the defence theme, so that's an interesting one. We'll certainly be tuning in for that. The former UK Prime Minister, Rishi Sunak, will be with us. He's been increasingly talking tech. Bridgewater Associates founder Ray Dalio, great voice on the markets, given the week we have had. And, of course, the NATO Secretary General, Mark Rutte. What do we know and not know about the framework? To what extent could that narrative around Greenland come back? What do we need to focus on next? Tom?
OK, some fantastic interviews then to stay tuned for. Here's what else to put on the docket, at least for the day. 9 a.m. UK time, Norges Bank deposit rates will break. 12:30 p.m. UK time, we're going to get the ECB monetary policy account at 1:30 p.m. UK time. US GDP and core PCE, we know, of course, that is important for the Fed. Jobless claims as well, rounding out the picture around the labour market. The US TikTok deal is set to close. And US earnings with GE and Intel after the market. Particularly interesting given the US government's stake in that chip maker, talking of the semiconductor space. And later, EU leaders will still be holding, we believe, and we understand, that emergency meeting on Greenland.
What a retro feeling to go back to some data. We've got some PCE data coming from the United States, haven't we? And the GDP data as well. So could that be something to watch? To what extent will the front end of the bond market be thinking about that inflation data? And we could be back to talking about inflation in the States and whether that's
That'd
something
be nice.
You miss those days.
I think inflation is coming back, definitely as a theme, certainly judging by the amount that's been written about it this morning in terms of the potential for inflation to be a risk. And you just think about the kind of, what have we learnt this week? Huge imbalances in the Japanese bond market, huge risks emanating from that. Would a higher, stronger inflation print, a series of prints, destabilise other bond markets potentially? The risk is becoming more apparent. And the inflation data.
And is that where our focus should be, given that in these volatile events, these risk events, ultimately what you see is markets going back up again? You've seen that time and time again.
Yep.
And the question should be really, what is the health of the economy? A recession would change the dynamic fundamentally, could be the argument.
Just volatility in the bond market might change the argument. The move index
Ken Griffin warning about that.
The move index is just epically low. Cameron Crimes has got this great piece, which is really worth reading, talking about kind of how far you need to go back in terms of where you would need to be for inflation volatility to be this low. 75 years. We haven't seen this for 75 years. It is weird what is going on in the bond market.
Shall we get some of the other stories, including Lisa Cook, which I still think is worth recapping?
Oh, no, totally. And yesterday was amazing. I was transfixed by this yesterday afternoon. The Supreme Court justices, as I say, pushing back against President Donald Trump's efforts to fire Federal Reserve Governor Lisa Cook for unproven mortgage fraud allegations. Justice Brett Kavanaugh, who, remember, was appointed by Trump, said the president's position would, quote, weaken, if not shatter, the independence of the Federal Reserve. President Trump will now ask Congress to implement his proposed cap on credit card interest rates. 10% is the number, 1 year is the duration. JP Morgan CEO Jamie Dimon not convinced this is a good idea. Dimon said the move would spell economic disaster for the United States. Citi's chief, Jane Fraser, meanwhile, says she doesn't see a realistic chance of bipartisan support. And SocGen says it plans to eliminate 1,800 positions in France by the end of 2027. It comes as the CEO of France's third largest bank looks to rein in costs. According to the CGT union, the plan for job cuts was revealed to labour unions this week.
Coming up on the programme, we will check on European chip stocks at the open, of course. Johnson and Huang giving comments to the World Economic Forum, lifting the sector in Asia. The OpenAI story also lifting sentiment with regard to technology. Plus, Bloomberg speaks to NATO's Mark Rutte in Davos after his landmark talks with Donald Trump yesterday. President Trump left those talks talking about a framework calling off tariffs. So what exactly is in the framework? Up next, we will head over to the Alps, where we'll be hearing from the European Investment Bank President Nadia Calvino, as I was mentioning earlier, certainly leaning into the defence theme at the EIB, so certainly a key voice on that subject. IB plus BBTV Go if you want to get in touch with the team that puts together this programme. This is Bloomberg.
We have not seen any reason to do that now, and we have followed this very long-term approach that let's reflect the global equity markets, the global markets, to mirror the size of the different markets, more or less, and that has served the fund well since the beginning in '96. The first time I was Minister of Finance, and also now when I'm back in the same job.
Norway's Finance Minister Jens Stoltenberg saying he sees no reason for the country's sovereign wealth fund to exit US markets. And this, earlier this week, given the geopolitical tensions, has been a topic of conversation. And Jens Stoltenberg, a really interesting person to hear from with that in mind, because, yes, he's a finance minister right now, and he's giving there the view of a finance minister, I think. But clearly he used to be at NATO. He used to run NATO. He used to be the Secretary General over at NATO. So he also has that perspective and that very Northern European perspective on the geopolitics and what's going on right now.
I don't know what. So we've got this meeting coming up a little bit later on of European leaders. Does the Davos deal mean that meeting is no longer required? Does Europe no longer need to respond?
Well, because there's so much we don't know about what that includes. For example, sovereignty of Greenland, because President Trump says we get everything we wanted. He was asked whether that includes sovereignty, ownership of Greenland, and he'd made a big deal about that being important, and he said it's complicated. And then we heard from the Danes this morning saying that that was not part of the framework. There was no Rutte said there's no conversation about sovereignty.
going back to what you both touched on before the break, which is the fraying of US-EU relations and the fact that some damage will be lasting and what that does for our appetite for European versus US assets, and if it does catalyse structural reforms in Europe around things like banking and around things like defence, and longer term, that could be a benefit for European assets.
Okay. Let's get back to Davos. US President Donald Trump says a framework of a future deal has been reached, but the transatlantic dispute has brought Europe's reliance on US security guarantees into focus. Let's get back to Davos. Bloomberg's Francine Lacroix is there, of course. Francine.
Anna, thank you so much. Yes, I'm delighted to be here in Davos, and I am joined by Nadia Calvino, the president of the European Investment Bank. Ms. Calvino, thank you for joining us. It's been a bit of a different Davos. I think there was a lot of anxiousness from a lot of European leaders and a lot of European businesses about what happens when Donald Trump spoke yesterday. Does it change anything in terms of the EIB, for example, how much you spend on defence to match that 5%, for example, what countries give to NATO?
Well, we've already started our change, a couple of years ago, and 2025 has already been a sea change, if I may call it that way or describe it that way, because we already reached 5% of our activities inside the EU devoted to security and defence. We are already financing a number of flagship projects, large-scale projects, including a military campus in Lithuania, research programs. So I think that we're on track to provide a very strong contribution to Europe's security and defence capabilities.
What happens next in terms of how Europe can organise itself, and does it change slightly your focus for the EIB?
Well, I think that what's going on is really a change of the world order. I think Mark Carney was very right on spot when he described what we're living. And that makes events like Davos more important than ever, because we need to have fora to debate, to talk to each other, to try to find compromises. Because at the end of the day, the approach of the European Union must be pragmatic when we can, but firm when we must. And I think that we are at one of those turning points in the current week.
You were part of the Spanish government, of course, before joining the EIB. Do you think that leaders and Spain should join France in trying to maybe activate the anti-coercion instrument against Donald Trump?
I think this is not a trade issue. It's not about tariffs. I think that also in the last 12 months, we've become used to tariffs coming in, going out. 24 hours is not enough to keep track. So I think that what we need is to see how to engage, how to reorient the strategic relationship that we have with the United States, which is obviously our most important partner from many points of view. And so it goes beyond, I think, the discussion on one or another trade instrument.
What's the role that the EIB can do in European defence if NATO acts no longer as a shared security framework?
It's quite clear that in any case, we need to reinforce Europe's capabilities. And that means investment in research, investment in industrial production, also becoming state-of-the-art, in terms of cybersecurity and new technologies. That is exactly what the European Investment Bank is doing. We have signed very important deals already with, just to give you an example, Quantum, the very important drone manufacturer in Germany. We have signed research programs with Thales, with Indra, with OSIA. So we are already on the spot financing those projects that can make a difference for Europe. And I think that we will start seeing the difference quite soon.
President, could the EIB actually be crucial for countries with high deficits or debts not willing to sacrifice their welfare states, such as Spain?
Well, Spain is not really an example right now in terms of the situation of the fiscal situation, because actually Spain has exited the excessive deficit procedure, so it is not one of the countries that is flagged, as a concern from that point of view. But indeed, I think that member states do see more and more the European Investment Bank as their partner to be able to continue to finance strategic infrastructures for the country. We're talking a lot about security and defence, Francine, but citizens care about housing, about health. Just today we're going to sign a very important deal in the housing sector, the largest ever in Belgium, 1.7 billion euros. We are really supporting those investments that are critical, not only from the business or the strategic point of view, but from the citizens' point of view. And I think that's important.
So do you think there's just a bigger role for the EIB, actually? How much of a bigger role does it have in 4 or 5 years from now?
We are already having a bigger role. You know, in 2025, we hit the 100 billion unprecedented level. And with our AAA and the fact that we have the 27 member states as our shareholders, that we have a very clear strategic roadmap, which is fully aligned to European priorities, I think that we're in a very strong position to be an engine and a key actor. And that's already happening as we speak.
Do you think this week in Davos there was a wake-up call from policymakers in Europe to be more competitive, to try and act and be more sovereign, but also from businesses and chief executives that maybe they could do things differently?
What we are seeing in the last year, and I think that we have seen it in the many meetings and events I've participated in Davos, is that there is strong interest in investing in Europe, that Europe is perceived to be a beacon of stability and trust, and that is essential for investors, obviously, and that Europe is also moving from action plans to action. And that's exactly what we need to do. I mean, we know each other for many years. You know, I'm really a person that is focusing on what we can do, and I think that's already happening.
I mean, Spain just announced plans for a sovereign wealth fund, right, to fill the gap left by the expiration of the next-gen EU. Is it something that the EIB could pick up?
We're already partnering with Spain and with other member states to try to make the maximum out of the Recovery and Resilience Facility. Spain is an example in terms of good use of those European funds. I mean, the growth level of the country, the reforms that we were able to undertake to really modernize and improve productivity in the country and digitalize it are already showing their impact. And I think it's very wise to try to extend that possibility so that we can continue to keep in Europe, and it's not only Spain, I insist, the right level of investment. Yeah. We should avoid, and I think that's the trade-off that you're trying to ask me about, we should avoid that because we invest more in security and defense, in stricter sense, and military investment, that we do not take care of all those investments that are also strategic for the future of Europe, because our security does not only depend on tanks. It is also about energy, it's about productivity, technological leadership, and international partnerships.
Nadia, Calvino, I mean, there's also going to be a change at the top of the ECB as, they're looking for a replacement for Madame Lagarde when she steps down. Is it time for a Spanish person to be in charge?
Well, thanks for raising the issue. Indeed, there's never been a Spanish head of the European Central Bank. In my current position, I couldn't possibly comment, but the fact is that Spain is the fastest growing economy. It's a large country, a large economy, very performant. They're excellent professionals, I'm sure, and it has never had a person at the helm of the European Central Bank. But it's not for me to comment.
Nadia Calvino, thank you so much for joining us. That was, of course, the president of the European Investment Bank. With that, Tom, I'm going to send it back to you in London, and we'll have plenty more throughout the day here in Davos.
OK, Francine Lecointe, thank you very much indeed. Fantastic stuff. Yes, some excellent additional interviews coming up as well throughout our programming. We're going to be hearing from the former UK Prime Minister, Rishi Sunak. That is coming up next, guys.
I love it. Not for me to comment. But a Spanish person would be quite a good idea. I just got to point out there's never been a German boss
and
at
actually,
the ECB.
we've done a survey, as we do, of economists, and the Dutchman Klaus Knot is most likely to succeed Christine Lagarde at the helm of the ECB, according to a Bloomberg survey of economists. And we have had a Dutchman.
It
was really interesting, pivoting a little bit, to hear from Nigel yesterday, obviously typically on the hawkish end, suggesting that, we would have to put a rate cut back on the agenda if tariffs come through. We know that's not the threat right now, but it was interesting to hear one of the
tomorrow.
There's always the next few hours.
Yeah, who knows? We might get some more tariff news. Who knows? As Tom was saying, Rishi Sunak will be with us, former UK Prime Minister. That conversation coming up from Davos. That's next. How does he reflect on this week's events? This is Bloomberg.
"30 minutes to go, 30 minutes till breakfast, 30 minutes till tacos." We're going to see exactly what we're going to see on the upside today from European equities. Looks like it's going to be kind of circa 1%, maybe a little bit less, maybe a little bit more. We'll see. Chips are going to be certainly a theme of that landscape. I think ASML priced a little bit of Jensen Huang's comments in yesterday, and we're going to get a little bit more this morning. Are bonds feeling the taco trade this morning?
Things looking flat and mixed, and maybe everything in Europe just a little bruised. But it's interesting that, bond markets have not necessarily been the haven you might have thought they'd be this week anyway. So with the removal of the tariff threats, maybe that's not where we look for the trade. actually, maybe it's in those futures that Guy just talked about, the fact that we've seen stock futures go higher.
Does the credit market's been kind of on pause for the last few days. Does credit kind of come back big time as a result of the fact that maybe this risk has receded? I don't know. We'll watch today.
We'll watch that and see what happens with spreads around credit. EU leaders are still going to meet, even if that tariff threat is off the table, at least for now. They're going to be meeting later today, as President Donald Trump, of course, said he would refrain from imposing those tariffs on European goods after a, quote, framework of a future deal was reached over Greenland. Despite the thawing, the US president made a series of attacks on NATO allies during his appearance at Davos.
NATO has treated the United States of America very unfairly. We never asked for anything. We never got anything. The problem with NATO is that we'll be there for them 100%. But I'm not sure that they'd be there for us. Other presidents have spent, whether foolishly or not, trillions and trillions of dollars on NATO and gotten absolutely nothing in return. We've never asked for anything. It's always a one-way street.
Not entirely accurate. NATO was there after 9/11. Denmark was there. Soldiers were there. Soldiers died, fought and died for the US, as did British soldiers as well. That was the US president, of course, Donald Trump, addressing the World Economic Forum. The UK and US relationship has, of course, been in focus at Davos, with both US Treasury Secretary Scott Bessent and UK Chancellor Rachel Reeves touching on it. Let's head back to Davos right now. Bloomberg's Francine Lacroix is there with a guest who has a particular view and some experience when it comes to UK-US relations. Francine.
Good morning, Tom. Yes, my next guest does have a couple of experiences under his belt. I'm joined by the former UK Prime Minister Rishi Sunak. Rishi Sunak, thank you so much and welcome to Bloomberg.
Good morning.
Look, it's been a bit of an odd week. A lot of the focus is on AI. We'll talk about it in a second, but it's really Donald Trump that dominated the agenda. How would you deal with him if you were still Prime Minister?
Well, obviously, it was welcome that we seem to have reached an agreement, or that we appear to have reached an agreement on Greenland yesterday, and Mark is to be commended for some skillful diplomacy. But obviously, the process of getting to that agreement has clearly damaged trust amongst allies, long-standing allies with deep friendship and partnership. That's been the very unsettling thing about the last few days.
Is Prime Minister Starmer doing it the right way? We keep on hearing from people that maybe are closer to Donald Trump that if you show a bit of teeth, he backs away quicker.
We in the UK, of course, the United States is our closest and oldest ally in that regard. And I think it is important, to make sure that we remain aligned with the US where we can. But this was something which clearly was unacceptable. And the Prime Minister was right to say that it was unacceptable and be firm on that. And I think that the diplomacy over the last few days has, it appears, led us to a better place than we were a few days ago. But you're also not wrong. It is important when lines are crossed that countries are able to demonstrate that strength, that they will stand up for what they believe in, stand up for their values and their interests. And the world we're in, this new world order, requires a bit more hard power. Whether we like it or not, there's no point moaning about it. We have to adjust to that, and we have to have that hard power, invest in it, and then be prepared to use it to protect our values and our interests.
Do you think European leaders and business feel pushed around? And does it mean that actually the nature of the relationship just has, it has changed forever?
I think trust is an incredibly important commodity when it comes to geopolitics and relationships, and it's something that is built up over time. And the damage that we've seen to trust in the last few days is obviously very sad for someone who believes strongly in the transatlantic alliance. And the frustrating thing is, my colleagues in Europe have been engaging with the US, who were right to focus on Arctic security. Of course, that's an increasing concern that we all should be investing more in and paying more attention to. And the Europeans and the Danes were very open to the types of arrangements that we're now, that seem to be part of the deal. We could have got to that place without all of the drama of the last few days and the damage to trust that it's done, and people then feeling that they have been pushed around and bullied, which is obviously very damaging for long-term relations.
Is Keir Starmer right in focusing now on China?
I think we're living in a world where the old world order is gone. China is a credible technological, military and economic counterweight rival to the US. We've also seen the rise in global swing states, if you call them that, like the Gulf states and India. This multipolar world is one in which Britain has to find its way. I'm always in favor of engagement. I think that's an important thing. But we have to be clear that, China also, does things that are damaging to our values and interests. And as we were just discussing, we as a country working with allies need to be prepared to stand up for those, where our interests and values are threatened, and seek to engage with countries where we can find common ground.
When you look at the UK, what should the government actually do to try and put the City of London back at the forefront of deal making?
Look, I started my career in financial services. It's a great strength for the UK. It's a great asset as an industry. And as we look to drive more growth, it's going to have to, in part, come from this industry. And actually being here this week, talking to leaders, they see the strengths in the UK. I think the key thing in the UK is we can't be complacent. We have a world-leading financial sector, but the world isn't standing still. You've seen very strong deregulation in the US, and it's not just there. New global financial centers, we talked about, the Gulf states, Asia are rising. They all want to come and take our business, take our place. So we have to be responsive to that. We have to make sure that we remain the most competitive place, not just in Europe, but globally competitive, because we have a global financial center.
Is there one policy that you would change right now that would make a difference?
Rather than say a bit of policy, the thing I would urge people to do is to move faster. I think we have to recognize that the pace of change that we are seeing, whether it's geopolitically, whether it's technologically, that's only accelerating. And whether you're an organization or a CEO, whether you're a country and a political leader, you have to just move far faster than you might have thought you could have, or how we used to do this. The world is changing too quickly. If we don't want to be left behind, if we want to be competitive, if we want to develop those hard power assets, whether it's economic strength or technological strength, we just have to move quicker. So rather than a specific policy, it's a mindset of more radicalism and more urgency.
You hear in Davos actually a lot of questions about reform. Nigel Farage is here. We've seen a number of defections from the Tories to reform, which means that there's a kind of like political momentum. I mean, what's happening?
Look, the UK has obviously been through a pretty volatile time politically over the last few years, if you see what's happened in different elections. So that degree of volatility we haven't seen in British politics for a very long time. So, I would caution anyone who thinks they can predict the result of the next election some years hence. And what I'd actually say is, I think under Kemi's leadership, the Conservatives are making it crystal clear that they're the only party that is fiscally responsible. And in a time where, look, you talk on your programme about rising sovereign bond yields around the world and in Europe, actually a party that is going to be honest with the country about some of the challenges we face, take the difficult decisions in order to have a strong fiscal foundation, focus on growth, is something that I think differentiates them both from the Labour Party historically, but also from Reform, who haven't demonstrated that same, I'd say, fiscal responsibility.
I mean, the perception is, are you expecting more defections to Reform? The perception
it's always disappointing when I'm a Conservative. And it's disappointing when former colleagues decide to go elsewhere. But as I said, I think actually under Kemi's leadership now, you're seeing very strong momentum, and particularly on this issue of the economy, which is front and centre. She's done a great job of making it clear that the Conservatives are the party that can take the economy forward. Reform can't offer that type of leadership. And you saw that in the recent budget, which raised taxes, raised welfare spending. Reform and Nigel Farage had very little to say about that. It was Kemi who was making the argument that was the wrong direction for the country, and she's spot on.
What's your take on AI? So a lot of the focus here is on AI. Have you played a role with Microsoft and Anthropic? How far ahead or behind are they?
Yeah, no, I think the interesting thing, there's a lot of talk about AI and the race to AGI.
Yes.
US and China in this great race to develop general intelligence. I think the more interesting race is who's going to adopt and use this technology the fastest. And history tells us you don't need to be the country that invents the technology to be the country that benefits the most from it.
As long as it's safe.
Of course, as long as it's safe. And that's why when I was Prime Minister, we held a summit to focus on this issue. We developed a security institute for AI that is understanding the risks it poses. But we're so early in getting the benefits of something that is going to change every aspect of our lives, whether it's economically, the delivery of public services, healthcare, education. Our entire society is going to be reshaped by this, I think, for the better. Of course, we need guardrails and responsible development. But the focus, as we were discussing earlier, should be about pace, and it should be about radicalism. We're all looking for ways to drive growth in our countries, ways to make the state work better for our citizens. It's a great frustration, and not just in the UK, but in lots of European countries. This technological development of AI will give political leaders the tool to do that for their citizens, to make their lives better, to deliver growth and prosperity. So they've got to seize it with urgency and radicalism.
I know President Trump and also a lot of the big U.S. tech companies are frustrated by the fact that they get regulated, they think over-regulated in EU. Does the EU also step up that regulation because they're at loggerheads?
Well, from a UK perspective, I can tell you, what I focused on in the job, and that was to make sure that we maintain our innovation ecosystem, right? It's a great strength of the UK. We have fantastic research universities. We have a great venture capital ecosystem. I mean, more venture capital into the UK than France and Germany combined, I always like to say. And particularly when it comes to AI, the legacy of what Demis has done in DeepMind has spawned an entire set of companies and people in that industry. And we've got to maintain that advantage. So having a nimble approach to regulation, which we did under my leadership, and I'm glad the new government has continued with that. There's been no top-down oppressive regulation of AI. We should be biased towards innovation at this moment, whilst of course keeping an eye on the risks that are developing. And the AI Security Institute in the UK, I think, is world leading in doing that and sharing that expertise around the world. So it's also becoming a soft power asset for us as well.
Rishi Sunak, thank you so much for joining us. That it was, of course, the former UK Prime Minister. With that guy, I'm going to send it back to you in London, and we'll have plenty more from Davos throughout the day.
Francie, thank you very much. Fantastic interview. Rishi's advice, move faster. Certainly going to be a theme, I think, for Europe as we work our way through 2026. Talking of Europe, there's a great headline in the FT. I'm not suggesting you go and look at the FT, but they use the word flummoxed. Okay? Trump's Greenland pivot leaves Europe flummoxed. How flummoxed are EU leaders? They're going to be meeting a little bit later on today. We've obviously got this Davos deal, as it's now being called. Mark Rutte seems to have originated that deal. Let's talk about what comes next. Chief Europe correspondent Ollie Crook joins us now from Brussels. Oliver, is Europe flummoxed by the Davos deal?
I would say that Europe is deeply flummoxed by the Davos deal. I think that, there's the only certainty we can sort of extract from the last 24 hours is apparently there's not going to be an invasion of Greenland by the United States. Apparently there will not be tariffs imposed on February the 1st. And apparently this is down to the NATO Secretary General, Mark Rutte, who we'll be speaking to in about an hour's time. So really the interview of the day, basically creating an off-ramp for the President of the United States to basically claim victory on getting all of the things that he wants from this sort of deal on Greenland. That is the security, that is on natural resources, without apparently impinging on Danish sovereignty. We don't know a whole lot about the deal and what it contains. We had a statement out from the Danish Prime Minister, which I'll quote from. She put this out about 45 minutes ago. We can negotiate on all political matters, security, investments, and the economy, but we cannot negotiate on our sovereignty. I have been informed that this is also not the case. And of course, only Denmark and Greenland themselves can make decisions on matters concerning Denmark and Greenland. They're saying they're open to talk about the Golden Dome and deploying that across Greenland and how they will partner with the United States in order to achieve that. That being said, we've also had some reporting from some other outlets saying that there could be ownership of certain parts of enclaves of Greenland that could go to the United States. The New York Times was reporting that it would look apparently something like the arrangement that the UK has with Cyprus, with some military bases there. So these are some of the ideas that are sort of on full display. I think for European leaders a little bit later today, the damage that has been done here, I think to a degree is permanent. Trust, I think, between the Europeans and America is close to zero. And I think for European leaders, the only sort of silver lining here over the last 36 hours is it allowed them to speak a little bit more candidly about how they felt, and they were able to draw at least some kind of line in the sand.
Oliver, thank you very much indeed. Oliver Crook, Bloomberg's Chief Europe correspondent. Up next, Jensen is just getting going.
Has started the largest infrastructure build-out in human history. There are trillions of dollars of infrastructure that needs to be built out.
Will chip stocks continue to climb? The European Open is 15 minutes away. This is Bloomberg.
Welcome back, everybody. Now, while President Trump has dialed back his tariff threats, European stock futures point higher as a result. Tensions have not necessarily entirely eased. So how is global business hedging global tensions and a rapidly shifting world order? Let's get back to Davos and to Jemana Besetcha. Good morning to you, Jemana.
Good morning, Anna. Thank you so much. Yes, it will be interesting to hear how businesses are responding, especially with so much uncertainty in the air. Really happy to say that Firstrand Bank CEO Murray Vilazakic joins me right now. So uncertainty definitely is a theme, even with slightly less uncertainty, I guess, this morning geopolitically. But for South Africa, I feel like the macro the last couple of months has been pretty positive. You had a good positive budget update back in November. The Eskom situation is a lot better. South Africa itself was removed from the dirty money watch list recently. How are all of those factors contributing to your outlook for the South African economy this year?
Thank you very much. Yeah, of course, it would be great to have some of the global tailwinds that would support us. But fortunately for South Africa, we are seeing a number of cyclical improvements. So I think you've touched on the fact that the third quarter print from a GDP point of view, I think was particularly strong. And I think we had a very good budget, medium-term budget, which again anchored the macro stability when it comes to the cooperation between our fiscal and monetary policies. So I think that was also something that we really welcomed from the business community. I think the Minister of Finance supporting the central bank's approach of lowering our inflation target.
Yeah.
So that we think, in around about 2028, we start seeing an economy that benefits from lower inflation, lower rates, and through the structural reform program, hopefully there is a GDP uplift, because I think our economy just has not been growing at the level that it should.
Yeah.
So a combination of those factors, I think, are providing good momentum for South Africa.
So from 2028, the president has a GDP growth target of 3.5% by 2030. Do you think it's achievable?
I think it's achievable. I mean, I think we are on about this year, at least for 2025 GDP growth, we're looking at about 1.4 to 1.5%, probably staying at similar levels for next year, improving a bit in 2028, getting closer to 2. But the key thing is, I think the implementation of the structural reforms should provide a kicker to a number of sectors in the economy. So I think if one looks at a GDP potential, 2% is still way down. But it will have to take concerted steps in maintaining the momentum reform. I think beyond the political era in which the president is in, I think the next government is also going to have to commit to continuing with the program of reforming the economy. I think we've seen success now in energy, in transport and logistics, but there's still a lot more work to be done in the South African economy.
Mary, the diplomatic relationship between the United States and South Africa is still quite chilly, and we saw that around the G20 last year, towards the end of last year. There's still a lack of clarity on tariffs. How much downside risk does that pose to your outlook for South Africa in the absence of de-escalation?
So I think if you think about the period that's elapsed from Liberation Day, and I think from when South Africa had to deal with a lot of the challenges on tariffs, it's quite a long time. I mean, that actually those businesses have had to think about what do they do. So there's, I think quite a bit of the GDP growth negative impact that's come through in 2025. Where some of those businesses are carrying on. So if, in the absence of a trade deal, and I think being at the tariffs of 25%, some of those businesses seem to be getting by. So I think the more time elapses, the more we understand the impact of what happens. I mean, of course, it's not ideal. You would prefer a different situation. So yeah, I mean, I think if you look across the world, if you look at what Europe has to contend with, we're all having to navigate, I guess, really similar, uncertain political environment, and I think for South Africa there's merit anyway in lying low, because really I think there are a number of problems that there are a number of challenges and opportunities in the South African economy that we can be focused on. Yeah.
Okay. I'm going to ask you a first-round specific question around the UK auto finance situation. Have you made a decision on the matter? Are you going to stay or leave the UK?
So we haven't made the decision because the FCA ultimately has to come with a final redress. We submitted our comments in December. I mean, we're very concerned with what came out from the consultation paper in October. And if a number of the substantive issues that we raised are not addressed, I mean, the amount that we are looking at is such that, I think our business going forward is not going to have the capital resources that are needed to support lending in motors. But we'll make that decision. Fortunately, it looks like time periods are imminent, and we will see. Hopefully, the FCA lives up to the commitment that they are also serious about having the UK as an investment-friendly country.
Where are the biggest drivers of growth for the bank going to come from this year?
So for Firstrand, in particular, I think we've always said we are a South African bank. 80% of our profits come from our domestic franchises. I think we're seeing an improvement in households. So our retail business is expected to do better. Lower inflation and lower interest rates are playing positively into a number of those strategies. And we still have quite a big housing backlog. So we are seeing demand start to come back with a bit of improved household confidence. Our corporate and our wholesale banking is seeing quite a lot of good activity on the advisory side and as well as on the lending side. So, we still think it's a corporate-led cycle, but it's very encouraging to see our retail business also starting to bounce back.
Mary, thank you so much for the time and for sitting with us throughout this cold. And Mary Vilazakic, the CEO of Firstrand. Back to you, Guy.
Jemana, thank you very much indeed. Fantastic interview. More to come from the World Economic Forum. OK, 5 minutes to go until we get to the opening trade, cash trade in Europe. Keep an eye on defence stocks. Keep an eye on the auto stocks. Keep an eye on the luxury stocks. All the stocks that have been affected over the last few days by what we've seen around Greenland and the tariff threat. Are we going to see some reversal of that trade? Futures are definitely higher. The taco trade is on. 5 minutes to go. This is Bloomberg. Thursday morning, good morning. A couple of minutes to go until the start of cash trade in Europe. The Davos deal, the taco trade, these are the kind of the phrases that are being thrown around this morning. That's the moment when Donald Trump basically starts to climb down on the Greenland story, and the markets react to it quite strongly. It's not that big a response, but the weird thing is that the response, you could argue, going into this wasn't actually that great as well. The amplitude seems to be getting a little bit smaller. Gold still fairly flat, but I think you're going to see maybe a little bit of a reversal of some of the trades we put on at the beginning of the week, at the end of the week. Tom, what are you seeing in futures?
Yeah, the tariff retreat, the AI catalyst as well, renewed AI catalyst coming through from OpenAI and Jensen Huang. So, European stocks set to open potentially higher by around 1%. FTSE 100 here in the UK looking to add 63 points. The DAX futures pointing higher by 236 points, almost a full 1% as well. Anna, what are you looking at?
Yeah, let's have a look at some of the sectors that could be in focus, Tom. I mean, European futures do look positive, so we are expecting broadly that sentiment to dominate. Luxury stocks and automakers could certainly be a part of that. If you look at what's happened over the last, I'll do 5 days because that captures everything we've seen this week, back to the end of last week. Consumer products and services, so that includes luxury, that's down 6%. Autos and auto parts down 4%. So we'll see how much of that we unwind. We've learned a lot perhaps about the fact that tariff threats are still present in markets, and so maybe we don't unwind all of that selling, but we will see. Luxury stocks, automakers in focus. Ubisoft is one stock specific to focus on this morning. There are others, but Ubisoft cancelling 6 games, slashing its guidance, a restructuring happening at that business. So we'll certainly keep an eye on that one. We'll see to what extent that stock trades weaker at the start of trade then, Guy.
Throw a few more in. Let's see what happens with the defence stocks. Let's see what happens with the chip stocks. So you're going to see maybe a little bit of reversal today. We'll see. The taco trade. Are we about to see what it delivers for Europe? Let's find out. Here we go. Here are some numbers. It is time to see what they look like. The FTSE 100 is expected. We're expecting most markets in Europe to be up 6, 7, 8, 9 tenths of 1%, depending on composition. So you can expect this market maybe to climb a little bit. Yesterday, very cautious at this point. Now we have a little bit more clarity. Can we put Greenland in the rearview mirror? That seems to be the trade that increasingly is coming on. We look forward, though. There's plenty of risks out there on the agenda. The BOJ's one, but there's plenty of others out there as well. So the FTSE 100 is up by 6 tenths of 1%. The stock 600, as we await for the rest of the sort of market to kind of fit in, is up a little bit more. Look at the CAC is up. We're up 1.2%. So a little bit of outperformance coming through there. The IBEX is up by 1.2%. So we may be outperforming expectations a little bit on the upside. Anna was mentioning it. Luxury could be an area of focus. The car sector is going to be a big focus. Does defence maybe deliver a downward beat when it comes to the story around the DAX will wait, but it's got the auto sector to fold in there as well. Switzerland was a big focus yesterday as well. We've got plenty to price in to European markets, sectors, single stocks. Let's find out what's going on. Tom, over to you.
Yeah, luxury is certainly up there. You've got the likes of Kering up 2.9%. The car maker Stellantis is one that's gaining along with many other peers as well. Auto sectors amongst the best performers. Banks also doing very well as a sector, currently up 1.5%. Consumer products, there you go with the luxury space up 1.5%. Autos, tech, all very much in positive territory with gains of more than 1%. Basic resources is one of the least well performing, and you've seen a little bit of a shifting dynamic around silver versus gold, currently at 0.2%. Under the hood, what are you seeing, Anna?
Yeah, it's interesting that actually there is one story that perhaps we have not mentioned and we should have done. This is the deal between Deutsche Börse and Allfunds. In fact, I think it was earlier in the show, wasn't it? Earlier in the programme. But financial services is the best performing sector actually, and that is partly to do with that Allfunds transaction because that stock is up by 3.6%. So there is a little bit of M&A to talk about this Thursday morning, as well as all of the trade narrative.
So, Jensen Huang, AI Effect, ASML, the biggest points gainer in the market this morning. It's up by over 2%. The pharma sector, which has been a little bit of a concern over the last few days on the tariff story as well, is also performing quite strongly. Novo, Astra up. LVMH is up by 1.83. Even Nestle is getting in on the action as well. So that's where we're seeing the upside, certainly. Schneider's up quite nicely. Defence stocks are down. Defence stocks, in terms of the points, make up the biggest points drops. BAE Systems, Saab are the two biggest drops this morning, but Leonardo's in the mix. Thales is in the mix. Rio's down a little bit. Maybe you take some of the metals trade off, but it's the downside is dominated by all of the big defence names out of Europe. No surprise in terms of what we're seeing there.
And autos is the best performing sector now, and we haven't even got all of the auto companies open yet. I can see BMW not open, so we'll keep an eye on that one. Clearly, the removal of the trade threat by President Trump, at least for the moment, is something that is lifting sentiment across these markets. Let's talk about the markets then. We're joined by Michael Masika, our senior EMEA equities strategist here at Bloomberg. And Michael, very nice to have you with us. It is interesting that some of these export-related stocks have fallen more than they're gaining this morning. I mean, wouldn't necessarily expect them to regain everything they'd lost, but certainly, does that tell us something about the journey we've been on through this week? It's felt quite harrowing.
Yes, that's right. The thing is, the uncertainty is back. It's like everyone forgot about tariffs last year. That was something that's okay. It's priced in. It's done.
Yep.
Now it came back. The kind of like the U.S. administration has shown that it's still unstable regarding that topic, that things can come back. Yep. And so there's a bit of caution approach here. So you see a rebound, that's normal. But will we see like a...
Is the right way to play this increasingly just to ignore it? You look through it, it's not going to have effect. At some point that's going to be the wrong trade, but I don't know when that is.
The broader picture is like everyone is very, very long. The positioning is very high.
Yep.
People are very risk on, and they want to stay that way. So what you see are small really small drawdown and bounces, and deep buying, etc. But at the end of the day, the mood is still very bullish and very positive. We're having a monthly survey of strategists. We'll publish it tomorrow. Little sneak peek there, but most of strategists are still very bullish, still pointing to upside. They don't want to cut their targets. They don't want to cut their APS estimates. They think the environment is positive. So this is just like noise. And we'll see some volatility.
Michael, is what we're hearing from OpenAI and from Jensen Huang, is that just noise, or are the fears around AI bubble being put in the rear view mirror, at least for now? There seems to be a little bit more conviction.
Yes, exactly. I mean, you can see over the past month or so, the AI trade has been stalling really, except for the semiconductors, which have been really strong, especially in Europe. The big tech in the US was kind of wobbly over the past few weeks. And maybe that's going to bring back a little bit more.
Is that a healthy dynamic, the fact that investors are now looking and screening out software versus semis?
I think it's healthy because it's all about thematics. You have thematics that you can play out on a short, medium-term basis. Last year was definitely software and big tech, and last few weeks have been semis. And this is where the orders are coming. This is where the shortages are. This is where investors want to be invested in.
Let's just talk a little bit about bond market volatility and equity markets. BOJ tomorrow. It may or may not do something that suppresses the volatility we've seen in the bond market in Japan over the last few days. But is this the kind of the lurking threat that bond market volatility picks up, that Japan is a pre-shock to what could happen in the United States, that the UK was kind of in this mix as well? If we start to see bond market volatility picking up, and it is unbelievably low at the moment, can the equity market ignore that, or does it have to react?
No, it has to react. We've seen even last year, every time bond market volatility was spiking, you had an impact on stock volatility. So it doesn't mean that you will have like a big drawdown, but it will increase volatility on the stock side. It's been driving it. The whole U.S. market has been really responding to bond volatility generally over the past year or so, and it will keep going. It will keep doing so. Yeah.
OK, Michael, thank you very much indeed. Our senior EMEA equities strategist on a risk-on day for these equity markets, with European stocks up 1.2%. For more market analysis, Skylar Montgomery-Koenig from our MLive team joins us now. Skylar, how much relief is there? Will it be sustained? How are you thinking about the risk-on environment that we're now seeing after the challenges of earlier this week?
Yeah, I mean, I think markets are hesitant to price these big policy outcomes because there has been this pattern where Trump makes big statements that he then backs down from. I think that's also why you see on the other side, in this case, Europe, not escalate, because they're hoping for some kind of deal, and saw with Canada that retaliation doesn't really work out well. Now, yesterday we got a reversal of the moves that were attributed to the tariff threat. So U.S. assets and the dollar were perkier and equities bounced. I think, you can get a bit of a continuation of that, but there are some trades that just make sense in this environment generally, right? So if you're worried about tariff threats or just geopolitics from a broader scale, then you should be positioned in commodities. And gold in particular, there are structural tailwinds from a central bank perspective too that makes that trade make sense. And so while it's crowded, I think people will continue to play that out. And it's the same with like the defense sector. So you're not necessarily thinking about individual trades like Europe's going to get tariff rates of 25% relative to 10%, but you're just thinking about how has the overall environment changed and how does that change my allocation?
Yeah, it's really interesting if markets start to ask themselves if the politics is becoming increasingly performative, Skylar, then, do they risk getting it wrong sometimes when it isn't? I'm interested, though, in us getting back to data. We're getting back to data. We're going to get some PCE data, GDP data today. Is it all too old, Skylar? Will it tell us anything useful?
I don't think it really will. I think it'll largely kind of be glossed over by the market in terms of the PCE data in particular. It's quite old, as in it's October and November data. We already have CPI, and we saw with those data prints that there was some skepticism over how accurate they were. And so I think with these prints as well, we'll get that. And we do have big catalysts coming next week, and we're also looking for headlines. So I think as we head into next week, we've got the Fed meeting on Wednesday, and increasingly, because we're now getting that backlog of data come through, the Fed has a lot of data to look at as we head into this meeting. And on aggregate, it's surprised to the upside, I'd say. If you look at a measure like ESI, so the Economic Surprise Index, but generally too, just the labor market's been a bit stronger. So there's a question of, will they address that hawkishness? Does that mean that break in the 10-year yield that we've gotten kind of sustains, as well as questions over who will the next Fed chair be? Will Powell resign? And everything going on there, I think, is of increasing relevance.
Skylar, how big a risk is the BOJ tomorrow to bond market volatility?
I think it's relatively low. They don't like to muddy the waters that much. And it's one of the places where you see central bank back down when there's something like an election or volatility. That's very much the mandate across the authorities you see in Japan. They don't want to create more volatility or speculation. And nothing's really expected from the meeting. It's expected to be a pause. And generally what you see, too, is if they are going to make a policy move, they telegraph it a couple of weeks beforehand. So that's when you get the surprise rather than at the meeting. I don't think that means that the risk of the yen going lower or JGB yields going higher is completely eliminated. I think it just means that you're looking more from the fiscal side of the equation, and you're looking more towards the election than the Bank of Japan.
Maybe them not doing enough, though, and not doing anything is a risk as well. Maybe the market's expecting something maybe to calm the situation down. It's going to be interesting to watch. Skylar Montgomery-Koenig from our MLive team, thank you very much indeed. Core 6 looks like this. Defence is down, chips are up, luxuries having a pretty good day. Let's figure out what is happening. A little bit of a move as well in the auto sector. I'm understating that. Let's get the latest with Jennifer Carreri.
That's right. We're going to kick off today with a look at some of those automakers. European car makers really getting a boost after US President Donald Trump said that he'd refrain from imposing tariffs on European goods from nations that oppose his plans to acquire Greenland. Trump citing a so-called framework for a future deal, although it's not quite clear what form that agreement will take. But those car makers really getting a boost this morning. Volkswagen up almost 6%, Stellantis up nearly 3%, Volvo Cars up more than 1%. Off of the back of that, Volkswagen also getting a boost from a positive beat on free cash flow for its autos division. Next up, we're taking a look at chips, of course, adding to a rally that we saw in Asia. That's really off of the back of comments made by NVIDIA CEO Jensen Huang, saying that the global AI build-up will require trillions of dollars of investment, really giving a boost to those chip stocks this morning. Next up, we're going to flip over to luxury. Of course, LVMH, one of the big winners this morning. LVMH up 2%, Hermes up more than 2% as well. Really, that's standing in contrast to earlier this week when LVMH was seen as one of the casualties of President Trump's threats to impose a crushing 200% levy on champagne and wines. Finally, we're looking at defense. Of course, investors have been on a lookout for stocks that are poised to benefit from increased European military spend over Trump's plans to acquire Greenland. Down this morning, Rheinmetall down 2%, Leonardo down 2%, Saab down 2.5% on the open in response to that. Back to you.
Thank you very much. Bloomberg's Jennifer Creary with the stocks that are moving. There's another one we'll add to the list. It took a while to open this morning. Ubisoft fell as much as 21% at the start of trade. In fact, no, 27% now. So considerably weaker, cancelling 6 games, slashing its guidance, restructuring the business from this games maker, Tom.
Just another individual name before we get a more macro look, because right now Beazley coming through with a statement unanimously rejecting Zurich's cash proposal. That's a redhead across the terminal. The stock's a little lower on the back of that news, having popped on expectations, or at least or the news that there was this offer from Zurich. But the board is rejecting that offer. Guy, you're also looking at gilts.
Gilts, will do them in just a moment in a bit more detail, but better data in terms of the UK borrowing numbers. That's helping gilts out this morning. We are going to hear from the man of the moment. I'm not talking about Donald Trump. I'm talking about NATO Secretary General Mark Rutte. He's going to be joining us in around 15 minutes' time. We'll come back. Ray Dalio is going to be joining us shortly as well. What's Ray going to have to say on the latest debt situation that is emerging in Japan and elsewhere? We'll find out next. This is Bloomberg.
Welcome back to the opening trade, everybody. 16 minutes into Thursday's session, and we see a really strong rally underway for European equity markets. Global stocks gaining after President Donald Trump abandoned his tariff threats against Europe. Europe, of course, getting the best of those gains. And so we see autos stronger. We see luxury goods stronger. We see about face for some of the sectors that have been so beaten up by that tariff threat, of course. But that's not the only thing that's on the move. Gilt yields also on the move this morning.
Better borrowing data for the UK. Much better borrowing data, actually. Certainly moving gilt markets this morning. Gilts have largely moved in line over the last couple of days. We're seeing a slightly sort of bigger drop this morning in terms of the numbers. If this can be sustained, that's obviously great news. Can it be sustained? It's not as if the UK doesn't have many things that it needs to spend money on right now. If you think about the kind of the geopolitical shifts, defence spending, that keeps coming up in the House of Commons about how the UK is going to manage to increase its defence spending. Plenty of things for the gilt market to think about.
Absolutely, because there's intention there, but absolutely no detail on how we get there. Now, let's think about where we've been through this week. Stocks rallying on the back of that better news that came from Davos. We will get another perspective on what we've been through over the last week in just a moment. Ray Dalio just standing in the wings.
So let's just talk, if you think about what is happening here, Ray is very concerned about what is happening on the debt story. You read his book, you kind of hear all his commentary. So he's concerned. Was Japan... How do I think about Japan in relation to that? The BOJ is going to be there tomorrow. I know Scarlett said yesterday she didn't think it was going to be a risk event. She almost certainly is probably right. But if the BOJ isn't there, if the BOJ is not there to support, Sumitomo's talking about going to 180 on the yen. How does that manifest itself globally?
Yes, and to raise concerns, that, Ken Griffin was saying that, was what happened in Japan actually a bit of a warning for the United States? There are massive differences, of course. There's not entire parallel in these stories and these narratives, but still, it is a bit of a warning about what excessive concern about debt levels can do.
Griffin said the bond vigilantes came for Japan, they could come for the US, and his warning, he doesn't see that as imminent, but his warning to the House and to the Senate is you have to deal with the deficits, you have to deal with the excess spending. He didn't call out the White House, interestingly, because the tax bill is going to push up that debt load. But this is potentially, is this a canary in the coal mine moment, or does the US continue to dine out on other people's funding?
Yeah, let's see what's on Ray's mind this morning. Let's get back to Davos, to Francine Lacroix. Fran.
Yeah, thank you so much, Anne. I'm delighted to be joined by Ray Dalio. Ray, so good to speak to you. Look, there's a lot going on in Davos. I know you see everything through the lens of 5 big forces. So money, debt, internal conflict, external conflict, acts of nature and technology, AI. There was so much concern about what the president was going to say here on tariffs. You put everything through capital. Are we living through a big capital war?
We haven't begun the capital war yet, and I think draw attention to it. I don't even think people think capital war. They hear a lot about trade war. And how does a capital war work and what is happening today pertaining to the markets and so on? Okay. The big issue is the opposite side of a trade imbalance is a capital imbalance. And so we have an issue now with the changing complexion of what is owned by capital. So central banks buying gold and replacing bonds and other assets. We see these things happening. The changes in that mix. And so President Trump's speech was very, very important because there's a red line that has to do with military as it pertains to Greenland. And if there is a military move, it has capital war implications. But beyond that, the issue of what is held as a reserve currency and the whole capital issue is something that's extremely important, not paid much attention to, and not understood.
Ray, a lot of U.S. policymakers or U.S. chief executives will push back. But for me, it's very clear that actually this week, if we are, relieved that the U.S. is not invading Greenland militarily, maybe there's a big shift, right, in this alliance. So is there going to be a big de-dollarization? Are you going to see countries outside the U.S. move away from the dollar quite quickly?
Generally speaking, you're seeing a diversification away from the U.S., right? Last year, U.S. markets, wonderful performance, but underperformed the rest of the world. And you're seeing a shift in the assets held, particularly, let's talk about money. In other words, when you look at the gold being up 67%, it's not a precious metal that goes up 60%. It was bought by central banks, particularly, but others, in order to diversify fiat currencies. Not just dollars, okay? It also has to do with euros and so on. Fiat currencies, which are essentially debt instruments that get monetized, were the big move of last year. The biggest move. Bigger than tech stocks, that was the biggest move.
What historical parallels are you seeing and worrying about right now?
Well, the similar breakdowns of the monetary system, if we're talking about the shifting to gold. There was a breakdown in 1971. Let's go to the monetary system. 1944, we say, what is our system of money? And it was gold, connections to the dollar and other currencies connected to that. And there was the process of creating a lot of debt, which is the claim on money. 1971, that breaks down, and then we go to a fiat monetary system. 2008, interest rates hit zero, we go to quantitative easing. In other words, debt monetization, the buying of a lot of that. 2020, we have COVID. Big deficits, essentially then big monetizations. With that pattern, there's been a weakening of the monetary system, meaning what is a storehold of wealth that's a medium of exchange that's accepted? That's an issue. And then when we get into a warlike environment, which we've experienced many times in history, countries do not like to hold each other's debts. They worry that some other country will sanction them, and also you print more money during such periods of time, which devalues money and devalues that debt.
So where are we in the longer-term debt cycle, and actually what do you most worry about over the next 1 to 2 years? What are markets missing?
Okay. I think that they're missing the value of money question, the debt and the understanding of the value of money. I don't think many people would think about, okay, here is what the value of money, and it was even bigger story than the tech stock story, okay? So I think they're missing that. I think what I worry about is that debt dynamic where what happens is it's a very simple dynamic, very easy to manage. When the debt cycle works, when debt and debt service payments rise relative to income, and then they squeeze out spending, and that becomes a problem. And they worry, and they also happen when the supply of the bonds is high relative to the demand. Right now, for example, there's a lot of holding of bonds, one man's debts or another man's assets. And if they don't have a high enough return, so what we get is the issue in terms of that supply
demand. Could we see a meltdown?
I don't think we're going to see a meltdown. I think a meltdown, I think you almost could see a melt up. In other words, when you have devaluations, anyway, the capital, what's happening to the capital supply demand as it relates to money is the big story that is not enough attention, particularly if you cross that line like military action in Greenland would change in important ways the demand for those assets. Because if you could look at those holding those assets.
So interesting. Ray, I could talk to you forever, but we don't have enough time. We'll have to do it again very soon. Ray Dalio, founder of Bridgewater Associates. Guy, I'm going to send it back to you in London. And of course, we'll have plenty more interviews throughout the day here in Davos.
Looking forward to them all. The NATO Secretary General is coming up. Frank, great stuff. Thank you very much indeed. Let's pick up on what Ray was talking about. What is happening in the debt markets, the perception of value and different debts around the world. UK gilts are certainly on the move this morning. This on the back of some better borrowing data, certainly some significantly borrowing data, better borrowing data. Gilts are outperforming quite significantly in Europe this morning on the back of that. 10-year 4.426 right now, down by three basis points.
Yeah, and you wonder if the move this morning is exaggerated a little by the fact that we've been so concerned about the long end earlier on this week because of the Japanese story, but just broadly across developed markets.
It's good news for the Chancellor, obviously, on the ground in Davos in trying to pitch the UK as a place of stability. And she's also been making the case that there's probably less likelihood she needs to raise taxes further from here. This is a step in the right direction. The lowest December borrowing since 2003. We see if that stays and holds, of course.
They're calling it the Davos deal, the deal that was done yesterday that de-escalated this Greenland situation. It looks like at the centre of that story was the NATO Secretary General, Mark Rutte. He is going to be joining us next. Really looking forward to this conversation. This is Bloomberg.
Happy Thursday. This is the opening trade. We are 30 minutes into today's session. Two key catalysts for these equity markets then. The tariff retreat from President Trump and a renewed AI catalyst. You're seeing gains across the benchmark in Europe of more than 1%. Autos doing very well. Luxury doing very well. The DAX then gaining 1.3%. Over in France, the CAC 40 adding 100 points despite the downside coming through from names like Ubisoft in the gaming space. Here in the UK, FTSE 100 lifted by 74 points, up 0.7%. Guy.
OK, let's deconstruct the taco, see what's going on in terms of the internals. 547 stocks are up, 49 are down. Yeah, I think we're risk on this morning in terms of what we're seeing in these markets. Huge swing to one side of the boat, and that is the upside of the boat. In terms of the volume, it is big. 35 is the number, so we are definitely on the front foot when it comes to what is happening with these markets. Let's talk about what is leading that story. Chips are up. Tom was mentioning what is happening there. You've got the comments from the NVIDIA CEO. You've got the OpenAI story boosting that space. ASML was up in the back end of yesterday's session. The pharmaceutical stocks are doing very well on the back of the fact that they've got the tariff withdrawal story. They've been hit quite quite hard this week. You could put a car sector in there, a stock in there from that sector, or you could put a luxury name in there. LVMH is up by 1.5%. So you've got tech and you've got Taco driving these markets to the upside this morning. Beazley is rejecting the Zurich offer. That stock is down by 2.5%. Remember, it rallied massively last week. I think the market, if you look at the risk arb on this one, maybe signalling it's not a big move to the downside, that actually this trade could still be on. We'll watch. The defence names are certainly under significant pressure, but the standout story on the downside, as we see gains being withdrawn, is Ubisoft. That stock, Anna, is down by 33% right now.
Yeah, certainly one of the big movers on the day. Let's get an update on some of the other stories we're covering for you this morning. The UK government borrowing fell more than expected in December, helping Chancellor Rachel Reeves in her bid to bring the public finances under control. The Office for National Statistics said spending exceeded tax revenue by £11.6 billion, the lowest December borrowing since 2003. Vladimir Putin says he could give $1 billion to Donald Trump's Board of Peace using assets that are currently frozen in the United States. This as special envoys Steve Witkoff and Jared Kushner prepare to meet the Russian leader in Moscow. Putin added that the remaining funds from the frozen assets held in the US could be used to rebuild Ukraine after a peace treaty is concluded. And President Donald Trump said he would refrain from imposing tariffs on goods from European nations opposing his effort to take possession of Greenland. Trump cited a, quote, framework of a future deal he said was reached regarding the island. Meanwhile, this morning, Denmark's Prime Minister said NATO talks with Trump did not cover sovereignty of Greenland. So still, Tom, a lot we do not know about the potential for a framework, about what this framework looks like, that has been, it seems, discussed, presented by NATO.
There has been some reporting from Axios, from the New York Times, suggesting that maybe part of this will be giving the US sovereignty around their bases in Greenland and emulating what the UK arrangement is with Cyprus, where we have British bases in Cyprus. Those British bases are technically UK sovereign. But the Danish Prime Minister coming out and saying that what they heard from their colleagues was that the sovereignty would be intact in terms of Danish sovereignty over Greenland, that they are ready to negotiate on defence, on the military. They're ready to negotiate on raw materials as well and rare earths. The sovereignty question is key. And to your point, we're waiting for the details.
Yeah, absolutely waiting for the details. Does make you wonder where this story has travelled in a week, because at the back end of last week, the Danes were saying, we're very happy to talk about all kinds of use of the land, and that wasn't enough for the United States. Now we hear from the president he's got everything he wants, but we hear conflicting conversations with the Danes. So we still don't understand a lot about what's happening here. And interesting, you see that reflected, that journey, that sort of round trip being reflected in markets of all kinds. We were looking at measures of risk around European credit, for example, really spiking at the beginning of this week and now dropping back right down.
Taco, it just once again, we're in a situation where it seems like we've seen a huge turnaround. The FT is talking about Europeans being flummoxed. I can understand why a lot of people are flummoxed by this. But as you say, the details matter. We need to find out more.
Arguably, the person at the centre of that turnaround, alongside the President, of course, was the NATO Secretary-General. Let's bring in right now John Micklethwaite, Bloomberg's Editor-in-Chief, standing by with Mark Rutte. John.
Thank you very much. Indeed, joining me is Mark Rutte, Secretary-General of NATO.
Morning.
Let's begin with that topic of Greenland. What exactly happened in that room? I've known you a long time. Nobody doubts your powers of persuasion. But we all saw Donald Trump on the podium saying that he wanted that big, beautiful block of ice. Goes into a room with you and he says he has a framework for a deal. What did you do?
President Trump has been clear from when he was in office, Trump 45, also when he came back into office, Trump 47, that when it comes to the protection of the Arctic, with a priority on Greenland, we have to spend more energy, more time, more focus on this, because we know the sea lanes are opening up. The Chinese and the Russians are more and more active. So what we discussed last night, how in a practical sense we can get this done. And we agreed on these two tracks. One is the 7 countries in the High North, including the United States, working together to protect against any adversary. So that will be something where NATO is heavily involved. And then when it comes to Greenland specifically, continuing the discussions they started last week. The Danish delegation, Secretary Rubio, Vice President Vance in Washington, to continue that discussion. Also to make sure that when it comes to Greenland specifically, their economy, their military situation, Russia and China will never get access.
And the Danes and sovereignty, is that all assured?
We didn't discuss at all about that issue. So we discussed how can we protect Greenland, how can we protect the wider Arctic region. And again, I think President Trump was the one who reinvigorated NATO at the summit in The Hague with the famous 5%. I think we can be thankful for the fact that he again has been able to take leadership on this issue. How can we collectively protect the Arctic?
The latest rumours out there that it will involve sort of bigger bases, longer leases, but not actually changing sovereignty, and the idea of far more American troops. Is that the sort of basis of it?
We didn't go into those details at all. We know that the Danes are completely open to having more American presence in Greenland, and Greenland is open to that. And I think it is good that these discussions take place with the three of them, because at the end I cannot negotiate on behalf of anyone. I was listening to a lot of people. I think there is a landing ground here, but in the end, of course, now we have to make it happen.
Do you think this is the week when Europe finally discovered its backbone?
I think this is the week where collectively, we decided to focus on this important topic under President Trump's leadership, and second, the week where we continue to focus on Ukraine, because I think that's still the main issue at the table, to make sure that Ukraine sustains in the fight.
In Trump's speech, there seemed to be a degree of linkage between the two. We're backing you in Ukraine, I want Greenland. Do you think that's a healthy...
Yeah, I never comment on speeches of leaders. What I do is look at the practical...
Very lucky in this case.
But I look at the practical stuff. And President Trump has been clear from day one in office, as he was already in his previous presidential term. And I spoke with him then when I was Prime Minister of the Netherlands. We had many meetings. And I know he is really worried about this thing of the Russians and China, and he's right there, getting more access to the Arctic. So I think next to saving NATO, he is now clearly taking the lead on making sure the Arctic stays safe.
And on Ukraine, what is your assessment of what's happening on the front there? Because there seem to be two very clear things. One European leader saying, look, Ukraine is really in trouble. Others saying, look, Ukraine is doing a bit better on the battlefield.
I think what you see is that the front line is not moving in the right direction. It is moving westwards, not eastwards. At the same time, it is extremely slow. The Russians are making very incremental gains, so not huge, very small gains, against huge losses. They are now losing 1,000 people a day in December, so 30,000 over the months. I'm not talking about seriously wounded, really dead. It's terrible, the losses they are experiencing at the moment. And of course also on the Ukrainian side we see losses, but not to that extent. And so the Ukrainians are extremely courageous in defending the front line, but again it is slowly not moving in the right direction. And I think the peace process is really crucial here under leadership of President Trump again, but also with Steve Witkoff and Jared Kushner, Marco Rubio. And I think the security guarantees are now in a good place, almost nailed. We are close to a deal, I think, on reconstruction. And now this sensitive issue of territory also has to be solved.
Just one thing on that. Front line, agreed, Ukraine is doing quite well. But back behind that front line, you've got people, it's freezing. There seems to be problems with the politics in Ukraine. Is that where the weakness of Ukraine is at the moment?
I would not say the weakness, but it shows you the Russian brutality and that they are willing to attack innocent civilians and civilian infrastructure, that people are now in conditions of minus 20 degrees are living without heating, without water in Kiev and Kharkiv and other cities, in smaller villages. And that means that I ask my European colleagues, please keep your eyes on this ball. The Americans are willing to provide Ukraine with the interceptors, the military gear they need, paid for by the Europeans and the Canadians. We have to keep that flow going. We have to make sure that we dig deep into our own European stockpiles when it comes to interceptors, to make sure that these fantastically courageous Ukrainian military can sustain in that fight.
Do you think in the peace talks that issue of where the front line has been sort of solved? Putin wanted all the Donbass. Many people point out that the Ukrainian line where it is at the moment is actually protecting the road to Kiev. So militarily you'd not want to give it away. Do you think that is now set in stone, and Trump has come round to seeing that?
Ultimately, it is up to Ukraine, of course, to decide what type of agreement they can do on territory. That's up to Ukraine. Yeah. But what I know is that for President Zelensky to really fully get his mind around that issue, he needs to know that we have security guarantees in place which will prevent the Russians from ever attacking again. The good news is that under French and UK leadership, this coalition of the willing came together. Then the American president said, I will help with backstop, with other unique US capabilities to make sure, building on the Ukrainian armed forces, 800,000 in size potentially, going forward. And that provides a package of security guarantees where the Ukrainian people know now and in the future, Putin will know, if I try again, the reaction will be devastating.
Is that one of the problems, again, another European leader, and you hear this repeatedly from your erstwhile peers, is that Trump always comes back to the same thing, that Zelensky is the blockage, not Putin?
I don't think that's fair. I don't think that's fair because he has always, also in many interviews, been very critical about Putin. I think he wants this done. He wants to end the meat grinder, and I'm with him on this. And he is the one who was breaking the deadlock with Putin in February, the first phone call. Only he could do this. He is the leader of the free world. He is the only man who was able to do that, to break the deadlock. And now the Europeans are helping. We are doing this together. Europeans stepping up again. We did it at the Nato summit with the spending. Now when it comes to Ukraine. But I think in the end, Zelensky absolutely wants to do a deal. The question now is, of course, to Putin. Is he willing to do a deal? And that's being tested at the moment.
When you step back from this week, I know you're right in the hurly-burly at the moment, going here, there, trying to keep people together. And as I said, you've got a lot of credit for what happened in that room. But you look at
credit
NATO
should be with President Trump, and I really mean this, because it was his vision to protect the Arctic, and I think yesterday we found a path forward to collectively do that.
But on NATO, as Mark Carney said yesterday, there is a rupture at the moment. You are head of NATO, that is the North Atlantic Treaty. I've heard more fury from European leaders this week than I think I have ever before in terms of America.
I would say to
Do
my
you
European
worry about
colleagues,
the long-term consequences
no,
of that?
and I would say to my European colleagues, focus on implementing the agreements in The Hague. Build your defence industries, get the spending done, get your men and women in uniform. The numbers of those men and women in uniform, getting them ramped up is crucial. I mean, Germany is leading the way here, spending 90 billion more in 2029 than they did in 2021. So that's fantastic. Opening factories all over the place, but still overall as NATO, including the US, our defence industrial base is still too small and we need to ramp that up. So I think to my European colleagues, focus on really on the ball. And the ball is Ukraine. The ball is the implementation of the The Hague Summit conclusions. And then when you have time after dinner, we can still gossip and talk, but it is about implementing the real decisions.
On that issue, that thing of Ukraine is still, in your mind, the big test. That is the bigger issue rather than Greenland and everything that is happening now.
Yeah, in the end, of course, that's overriding. And when you look at Greenland and the Arctic, it's about Russia and China. When you look at about Ukraine, it is also about Russia. And how do we protect ourselves against Russia? And Ukraine, of course, it's crucial that they sustain in that fight and that we get Ukraine to a sustainable outcome. And this is exactly what President Trump and his team, but also many Europeans supporting him in this, are working towards.
Mark Rutte, Secretary General of NATO, thank you very much.
Thank you very much.
We wish you all luck.
Thank
you very much.
Thank you.
Back to the studio.
John, thank you very much indeed, with one of the most consequential, if not the most consequential interviews of the day. Bloomberg's editor-in-chief, John Micklethwaite, with the NATO Secretary-General, of course, Mark Rutte. Meanwhile, a new poll suggests British business leaders want the Labour Party to keep Keir Starmer as Prime Minister, but many are open to backing Reform UK at the next election. Let's go back to Davos, where Bloomberg's Stephanie Flanders is with the party's leader, Nigel Farage. Let's listen in.
For example, you can now get benefits if you suffer from mild anxiety. Well, I have mild anxiety every morning. I mean, we've just reached a ridiculous level with all of this, and it can't go on. It just can't go on. We're looking at a benefits bill of 300 billion by 2030, something like that. So it can't go on. And look, of course, I'm there to challenge all of these things. And what I will do over the course of this year, I mean, bear in mind, I've only been back in politics 18 months. I escaped, I got out over the wall, but I'm back again. I've had 18 months to try and build a political party, a structure from nothing. So effectively, I'm the CEO of Reform, and we build departments, and they give their weekly or daily reports into me, and we're growing. The next big stage of my development will be that this time next year, sitting here on the Bloomberg panel with you. It won't be me, because there will be a team of people appointed to take all of those jobs. And that's the next, that is the next big stage of the development. So, perhaps the criticism that could be levelled fairly against me, there were lots levelled unfairly against me, but the fairly against me is that, I've never been in frontline government, true, and it's a one-man band. So at the minute, I'm asked to talk about economic policy, foreign policy, law and order, borders, everything. And so it's now about broadening the team, putting different people in position, and then formulating firmer policies than we have. But we have laid out already some proposed bills, economic bills, the concept of the Britannia card to try and bring high taxpayers back to Britain, the digital markets, digital assets, and crypto bill, so that we are showing a way forward.
One other, we'll get onto the foreign policy in a minute, but there were just a couple of other domestic things. I mean, obviously, along with the welfare bill, and a big part of the increase in that half of spending is the triple lock. And you've suggested that would be up for discussion. Do you think it's affordable to continue that?
Everything's up for discussion. I mean, I think my main target in terms of cuts is excessive welfare spending. I get the logic of the argument over triple lock. It's something we'll come to over time.
The argument that it's too expensive.
The argument that it's too dear.
And also the generational issues.
Yeah, well, you can't blame young people for being pretty cheesed off in Britain because they can't even aspire to have the things their parents had or their grandparents had. And that is a real problem. And one of the huge problems here, of course, is the lunacy of saying we want to send 50% to university. Something that Blair introduced, supported by the lapdog Tories. And now we have, loads of kids who've been disadvantaged by going to university, and others who are now paying marginal tax rates because of the extra 9% on everything they're earning. It's virtually usury, frankly, the way it's been done, forcing them abroad. And that's one of the areas with young people that really is making young people unhappy. It's also leading, and by the way, I'm not against university, I'm just against university for 50%. And a lot of those very bright graduates that come out of university that could be a huge economic benefit to Britain, just look at their tax bill after the first year and decide I'm going to go and live somewhere else in the world. So all of those things we've got to think about too.
You've got a lot of people in local government. I mean, one of the areas that certainly economists think probably doesn't work very well is council tax. And you've now got reform running around a dozen local governments. Is that something that, they all wanted to cut council tax. Lots of them are having to increase.
Not true.
Several of them said that, committed to it.
Not true. No, it's not true. Urban myth. I spent the whole of April travelling around the country. I never once promised we could cut council tax.
They weren't voting for you. They were voting for these councillors who did say they would cut it.
Well, you can believe that if you want to.
Well, they're the ones who are now stuck running it, having made these promises.
I think you'll find increasingly in British politics, at all levels of election, people either vote for or against the leaders of the main parties. We've sort of almost got a quasi-presidential system. Here's the point. We campaigned saying local government had serious debt issues and that we would trim expenditure. And we have already cut hundreds of millions of pounds of spending. But the debt burden around the necks is huge. If you look at our council tax increases, by the way, they're lower than the other areas run by the other parties.
Quite a few of them are the maximum amount. But anyway, I suspect
they are lower.
This audience,
no, I'm going to repeat.
I care about council tax.
I'm sorry. The reform council tax rises taken across the 12 are lower
over average,
over the average than the other parties.
So you mentioned Brexit. You mentioned that we should have made more of an opportunity out of Brexit.
We should have done it immediately.
We've talked about the end of, that globalism has certainly, changed, and we are seeing a new kind of global order. I haven't heard you say, what is Britain's role in this new global order? How do you see, when you think the debates this week, how do you think about your foreign policy?
Number one, we have amazing advantages. Being outside of the European Union leaves us free in terms of trade policy. Ironically, the super Remainer Starmer boasts at the dispatch box now about the fact we've got an independent trade policy and we're able to do things. And I think in terms of being a bridge between Europe and America, we're in a powerful position. I just think we've underutilized the amazing advantages we have across the rest of the world. We turned our backs on India, we turned our backs on the Commonwealth countries in the 70s. We decided that Europe was our future. That became the sort of foreign office and political priority over decades. And we've turned our backs on large parts of the world where there is still a remarkable relationship between those former colonies and ourselves. So we need to think more globally in every way.
Prime Ministers, China is the obvious country that there's been a big debate about. Prime Minister's going to visit, I think it's the first prime ministerial visit for the UK in 8 years. Would you go to China? How would you think about the relationship with China?
Well, I don't believe our relationship with China is very good. I think this government is utterly craven in the way that it gives into China at every opportunity. It's a difficult problem because they've become so big, and to some extent we've become quite dependent upon them, and not the other way around if you think it through. So it's a massive, massive problem. But it's not a relationship we should trust, and we should be extremely cautious of them.
But what does that, if you're Prime Minister, what does that mean?
It means you don't allow them to build an embassy on the site of the historic Royal Mint, which could potentially threaten communications. I just can't believe it. I think Isaac Newton would be turning in his grave.
So there is, I like the fact that
OK, you've been listening to Stephanie Flanders in conversation with the Reform UK leader, who, of course, is Nigel Farage. We're going to continue to monitor all the events that are happening in Davos, and we'll continue to bring you all the headlines that come from them. EU leaders are going to be meeting today, we understand, with the future of NATO, the issue of Greenland, very much top of the agenda as well. Let's listen to another conversation that is focused on what is happening here. We've got the German Chancellor delivering a special address at a panel in Davos. Let's listen in to Friedrich Merz.
We are reducing our economic and technological dependencies. And there is no room for isolationism and protectionism in this agenda. Instead, we are talking about strategically coordinated ties worldwide. Europe's trade ambitions are crystal clear. We want to be the alliance offering open markets and trade opportunities. We want to strengthen the rules for fair trade and level playing field. Europe must be the antithesis to state-sponsored, unfair trade practices, raw material protectionism, tech prohibition, and arbitrary tariffs. Tariffs, again, have to be replaced by rules, and those rules need to be respected by trading partners. On this, the EU is making great progress. Mercosur has been signed. And by the way, I deeply regret that the European Parliament has put another obstacle in our way yesterday. But rest assured, we will not be stopped. The Mercosur deal is fair and balanced. There is no alternative to it if we want to have higher growth in Europe. And most likely, this agreement will provisionally be put in place. In a few days' time, the President of the European Commission will travel to India to establish the principles of a free trade agreement between the subcontinent and the European Union. I was in India a week ago, and I have no doubt whatsoever that the era of great powers presents an opportunity for all of us and for all countries that favor regulations above arbitrary rule and see greater benefit in free trade than in protectionism and isolationism. And Europe is joining forces with new partners, as you do see in our efforts to finalize trade agreements with Mexico and Indonesia. In order to make best use of these new partnerships, we need to put our house in order at home. We are aware.
OK, the German Chancellor Friedrich Merz speaking then about Europe's role in this new global world order, talking about trade deals. And, of course, it is the reversal, at least for now, on that tariff threat from President Trump that is feeding into the upside for these equity markets with a sprinkling of AI.
Yep, we're not done yet. Massive day coming up still. Yesterday felt like it was the big day in Davos. We're not quite done yet.
We are not. We are going to factor in some of that optimism around tech into the Nasdaq Open, it looks like. 0.9% higher there. We've got data, to your point, to come out the US, PCE, GDP. We've got a meeting now between President Zelensky and President Trump. And the last one was OK. The one before that, not so good. So we'll have a look at how that one goes. Plenty more conversations coming up on Bloomberg TV, of course. The French Trade Minister will be with the team. We'll also be hearing from the Accenture CEO, the Darktrace CEO, Marsh CEO. So a mix of different business voices represented on the pulse to weigh up where we've got to so far on Davos. This is Bloomberg.